You're listening to the Be Better Off Show by Kelly+Partners.
Well, welcome to the Be Better Off Show by Kelly+Partners. Chris, it's fantastic to have you here today. Founder of Coolibah Investments, one of Australia's leading investors and commentators, interesting men all round, columnist on the Australian Financial Review. And this afternoon, I'm proud to announce that on the front page of your FinReview app, when I open it, the third item that comes up front screen is Chris's article. So we'll get to that later. Christopher, welcome.
Thank you for having me on the show, Brett.
Hey, thanks so much for joining us. I'd love to start as I always do. I always think, business is done by people, so it's always good to know about the people. Where did you grow up and what did you study and how did you come to sort of investing as a career?
Yeah, a bit of a circuitous route. I always feel that the people that generate a lot of wealth, the great innovators, are often folks who have risen from a lot of adversity and been motivated to really push their personal envelopes. I can't say that I did. I was very lucky. My dad was a successful accountant and tax lawyer and property developer, and we lived a very fortunate life, to be honest. I grew up at school in Sydney, then went to school in England, came back to Australia, went to school in Victoria. I was mad keen on my sport, my rugby, my tennis, my skiing. Then went to Sydney University, studied economics and finance honours there. Was fortunate enough to win the university medal at Sydney Uni, and Malcolm Turnbull hired me out of Sydney and brought me into Goldman Sachs in mergers and acquisitions and principal investments, starting in London. And then I came back with Goldman to Sydney, and then got lucky, won a scholarship to Cambridge University to study a PhD in finance. And I, in the meantime, between Goldman and the PhD, I did a short stint at the Reserve Bank of Australia. It was only ever meant to be a short stint, and went to Cambridge University, kind of knocked over most of the PhD in the first 12 months, set up a funds management business at Cambridge with a kind of quantitative focus and a fixed income and real estate focus, and then ended up selling that business to Macquarie Bank in 2010, and I started Coolibah Capital in 2011. Along the way, I did a lot of policy work for governments. So I wrote a report on housing for Prime Minister John Howard. I advised the Rudd government on a response to the global financial crisis in 2008, where they invested $15 billion into an idea that I developed with Professor Joshua Gans for them to buy residential mortgage-backed securities to provide liquidity to that market. And I've advised Scott Morrison and Josh Frydenberg on the coronavirus crisis, but also on other initiatives, including one where they've also supplied liquidity to the asset-backed securities market and the RMBS market to the tune of about $2 billion initially, and then more recently in total about $15 billion. So I've always been involved in policy debates and public debates. And of course, as you mentioned, I love writing. That's my hobby. And so I write a weekly column for the Financial Review.
Chris is active on the FinReview. I follow him on LinkedIn. He's always got an interesting perspective. And, in a time of, I've come to see the face mask promoted by China as, a commentary on their free speech and their interest in dialogue generally. But our society has become pretty bland, pretty blank. So the commentary tends to be quite boring and not necessarily insightful. So I always like Chris's commentary because he's taking a position. And that's become more unusual over time, at least publicly. So Chris, where we stand now with a business like Coolibah, can you tell us a little bit about Coolibah, and then I'd love to ask you about, where do you see the economy and what are you guys up to? And
Sure, yeah, thanks, Brett. So Coolibah Capital, we run about just over about $3.7 billion. We focus on Aussie and global fixed income. The team has 23 staff, 11 analysts, and 4 portfolio managers. The team kind of talk about revenge of the nerds, but it's a very nerdy group of guys and girls. I think there are 3 or 4 PhDs in the team, and a lot of engineers, mathematicians, physicists, actuaries, economists. And what we do is we buy and sell bonds, looking for the cheap bonds that are mispriced. So in bond market terms, we're looking for bonds that are paying over the odds interest rates that are not warranted by the risk associated with those bonds. So for some of the listeners, it's much like looking for term deposits, and you're rolling your TDs and you're looking for that Ubank or ING Direct special that's paying over the odds interest. We do the same thing in the bond market, and we just kind of, what's that?
Are they corporate bonds?
All types of bonds. So corporate bonds, bank bonds, government bonds, generally very high grade, generally bank bonds, not corporate bonds. We can invest in corporate bonds, but there are a lot of liquidity and credit risks in that market that we tend to avoid, but we're very active. So for example, in the first 4 or 5 months of 2020, we've bought and sold over $6 billion worth of bonds. And we're regularly trading 20, 30, 40, 50 times a day, typically transacting, $50 to $100 million a day. And we're hunting out for mispricings. And so what we try and do, Brett, in our business is not just give people yield, because anyone can get yield on a bond, but we actually want to get capital gains, which is kind of anathema to fixed income investors. You normally just think, okay, all I get is a yield, whereas in equities, I can get the capital growth, the capital upside. The way you get capital gains in equities is you find a cheap stock that's mispriced. It's probably paying a high dividend yield, but you think that price will normalize and you'll get that capital growth. And we do the same thing in the bond market. So we're looking for those cheap bonds that are paying too much interest. And when the price rises, that interest rate drops down and normalizes to our fair value target. So we revalue every bond in the world every minute of the day that we can trade, using up to 30 different quantitative models. And that's what we do, mate.
Okay, so it's a global bond-focused type of client that's investing with you, and where do they come from?
Yeah, very good question. It's the full spectrum. So we have a lot of insto investors, so super funds, leading Australian industry super funds that are well known, universities, top Australian universities that are well known, lots of family offices, tons of family offices, and then middle income households right down to, I guess, younger savers. But most of our capital that we manage, the lion's share, is for institutional investors, insurance companies, super funds, universities, other fund managers, corporate treasuries, the full shebang.
And that is it. What's the structure of the fund? Is it $3.5 billion in one fund, or is it in multiple funds? And are they?
Yeah, that's a good question. That's a very good question. So we actually run about 20 portfolios, and we have more or less 4 funds. So there's a range of different options. One targets cash plus, so the RBA cash rate plus 1 to 2. Another one targets RBA cash plus 1.5 to 3. Another targets RBA cash plus 250. Another targets RBA cash plus 4 to 6. And all those products have been designed by reverse inquiry. So an existing large investor has come to us and said, Chris, I don't want cash plus 1.5. I want cash plus 2.5, or I want cash plus 4. But most of the time, Brett, we actually run customized institutional mandates for family offices and for super funds. So anyone with more than $30 million, and they come to us and say, Chris, the fund's great, but we don't want the fund. What we'd like is a custom solution. We don't like these banks, these bonds, and we manage it according to their preferences.
Okay, so they can sit down, come up with a customized strategy, remove things that they don't like, focus on geographies potentially that they do like, take out companies they don't like.
Exactly. Yeah, it might be that they want certain environmental, social, or governance focuses, but also a lot of the time these very, very high net worth family offices and insto investors, they don't want to commingle their money with anyone else. They want to have the money actually not held in a fund, but in their name. And then we act as an advisor on the account. And they want that direct look-through control of the assets. They don't want to have any unitization or fund intermediation. So it's horses for courses. I have massive investors with over $100 million in the funds, and who are very comfortable with the funds and love the funds. Others want customized, specialist mandates that reflect their preferences, where they hold the assets in their name.
Great. Now, you also started another business called Pinnacle. I think it's Pinnacle. Did I read about it?
I know Pinnacle is a shareholder in my business. So Pinnacle recently acquired 25% of Coolibah Capital in December last year. Pinnacle is an ASX listed company. Its market cap is about $600-700 million, I believe. They have about 60 billion under management, and they invest in fund managers. And we actually had, this is all public information, but Angela Bennett, who is an iron ore billionaire, owned a quarter of Coolibah Capital. She was one of our first investors. She remains a very large investor. And Pinnacle, well, actually, frankly, we got approached by a whole bunch of groups, Magellan, Pengana, and a bunch of others. And Pinnacle also approached us to buy into the business and to buy the Bennett stake, this family office stake. That was a core of the business. And we happened to have a sort of melting of the minds with the Pinnacle guys. they'd started 15 different fund managers. So they've got 15 in their suite.
Yeah, so they just sort of do back office, centralized back office and do fundraising for you, or?
Yeah, that's right. The main thing, we don't need that because we've already, we've raised a lot of money and we have our own back office. But what was the main, and you kind of empathize with this, Brett, the main value of Pinnacle was that there was a commonality of entrepreneurial spirit. We had a wonderful family office that were going to be long-term investors, but they always said to me, Chris, listen, if you find a better shareholder that's going to add much more value to your business than us, well, we're happy to make way, obviously at the right price. Again, this is all public information. Pinnacle acquired 25% of the business for, I think, about $34 million in December last year. And Pinnacle is a huge organization. Like, they've got 100 staff, they've got 30 people in sales. As you mentioned, they've got the back office, they can provide administration support. We're not a new manager, so we don't really need some of that stuff. We benefit from the distribution. But the main thing I loved about Pinnacle was, like you and I, they had started businesses from scratch. So the founder of Pinnacle, Ian McCowan, was the first CEO of QIC, one of the biggest sovereign investment funds in Australia, like I think $80 billion plus investor. And then he set up Pinnacle from scratch. It's now almost $1 billion business. And they've raised about $60 to $70 billion since the GFC, which is incredible. So after Magellan, Pinnacle is probably, the ASX code is PNI. I'm not a shareholder, so I'm not trying to spruik the stock, but yeah, really amazing success story. And when I met those guys, it was an instantaneous recognition of a kind of shared cultural spirit, if that makes sense, as owner-founders and entrepreneurs.
Yeah. Okay. So that's a good place to go, because I'm a big reader. I love to read, and it's a fantastic book called The Founder's Mentality that Bain and Co have published. I think for a fund manager or anyone interested in business, it's quite a good methodology of thinking about how a founder thinks. It's the research in that book indicates that companies listed in the US over the last 30 years that have a dominant founder have outperformed the market by 9 times. And so I think what you speak to there is not that often understood, frankly, because much of the news from big companies are all big listed companies that are owned by no one and everyone. But it does seem that there is a meeting of minds between people that have founded business and have a bit of entrepreneurial get up and go. They're our type of client, I guess, and that's who we're speaking to largely in our audience.
I actually have a theory on that, Brett. I haven't read that book, but I have a theory that if you look at any business that's innovated disruptively, any business that has achieved extraordinary growth and change, has disrupted an industry, created new products, new services, they've always been started by a dominant owner-founder core. So it might be one individual or a group of individuals. And my theory is that it's much easier to innovate and embrace unconventional thinking when you have either one sort of benevolent dictator, for want of a better term, but you have one sort of key actor within a business driving it forward, then the alternative that you see in institutions, where you tend to have multiple layers of decision-making committees, where those committees tend to in turn operate on a kind of consensus basis. And I think consensus is a killer of innovation and change. And you often get lowest common denominator solutions. And many of the stakeholders in those committees often are participants in the upside associated with the decision-making process. So I think that one of the reasons that's right. So one of the reasons big companies struggle to innovate once they become big is precisely because they get kind of encumbered by that bureaucracy.
Yeah, there's this great saying I've got, Chris, which is the average of the average of the average is below average. And as you take it through a committee process, to attempt to knock off the rough edges, you knock off any sort of alpha or any sort of out of the box thinking, which is interesting. The other one is that I think leadership's decision making, and the more people that have their hands on the key decision making to really back in somebody that unconventional position, it just tends to be that you don't make decisions.
I think that's right, and I think we've seen that politically as well. Like, I think I completely agree with you. Leadership is ultimately, it's tautological. It's true by definition that leadership is all about decision making under duress and conditions of extreme uncertainty. And it's really interesting. It's, I see this as a trader. Like, you can see personality types. I can hire a guy who's brilliant, won the university medal, or has a PhD, and he's got an incredible CV, but he may be a terrible decision maker. He may have all the information in the world, all the analysis. He may see all the solutions, but he can't choose which is the right solution. And then there are other individuals that may not, look remotely as compelling or impressive on the basis of their academic credentials, but they're instinctively and intuitively very, very strong decision makers. I mean, I'm pretty upfront. I don't consider myself party political, but I'm upfront in being, or in my AFR columns, in saying that I have a lot of time and respect for the Prime Minister, Scott Morrison, because I actually think he's preternaturally underestimated. But what he does is he consistently underpromises and over-delivers, always ScoMo, as far as I've known him. And he's a real grinder. He works very hard, but he's also generally, not always, but generally a really good decision maker. And that for me is a gritty, nuanced, intuitive process where he's kind of synthesizing the information and selecting that right choice.
Yeah, I absolutely agree.
When we invest, we do something now to build something greater for the future. Investment Wisdom, the new book by Brett Kelly, helps you invest for the future. The best way to learn is to sit at the feet of giants and listen. And Investment Wisdom, featuring 9 of Australia's leading investors, puts you right at their feet as they share their stories, inspiring and informing your own investments. Every copy of the book sold goes to invest in the future of Australia's next generation of business leaders. The Kelly+Partners Scholars Foundation links Year 11 students with some of the most innovative startups and founders in Israel to accelerate the building of a future generation of capable, adaptive, and agile leaders who readily embrace the process of learning, unlearning, and relearning. The scholarship embodies the spirit of innovation, sparking new opportunities for creative business and social endeavours that will create positive change. To gain access to the insights of Australia's leading investors and to invest in the next generation of Australian business leaders, buy a copy of Investment Wisdom now through all leading retailers or through the Brett Kelly Bookshop at brettkellybookshop.com.
Just picking up there, I think that's a great point. And while we're in politics, I think we're on some shared ground here. When they took, when you saw the Rudd, sort of the Howard, I guess I've interviewed in my books over time almost every living Australian Prime Minister, which is really interesting. The only one that I haven't put into a book is, or had direct interaction with, is John Howard, although, I've met him a number of times and had a number of discussions with him. But, I've interviewed Sir John Gorton, Gough Whitlam, Paul Keating, Bob Hawke, Tony Abbott, Malcolm Turnbull launched my second book in '98 at the National Press Club. And so I've observed these people, I guess, at close quarters. But Malcolm Turnbull struck me as the ultimate very bright guy, decision-making different. When ScoMo sort of was given the nod, I actually said to one of the senior Liberals at a function I just happened to be at, was, you've actually put a person in that role who's a politician. I'd heard John Howard once say that there is no training to be the Prime Minister. It is a completely unique job, and it takes you a number of years in that job to really know what you're doing. But I saw them with the campaign, obviously twice that Abbott ran, and also then with what ScoMo ran, this real discipline, depth of application to the task. And so leadership is often described as, big vision and grand speeches. But it does seem that word you sort of mentioned, the grittiness of it, the dirty hands, muck under the nails, and not, ScoMo doesn't always look like he walked out of a magazine, but he does tend to turn up on top of the facts.
Yeah, I think ScoMo's a very good decision maker, surprisingly so, I think, for a lot of folks. And I think politics is generally a very, very poor preparation for decision making in leadership, because if you think about the political calculus, it's always about sort of landing short-term blows on your opposition and your foes, and acting in a highly myopic manner, leveraging and riffing off the 24-hour news cycle without any real consideration of the medium and long-term costs of those decisions.
Yeah.
So they get wide into this very reflexive, short-term, I think, decision-making behaviour. But
it's almost responsive. It's almost stimulus response behaviour rather than a decision in some sense. It's sort of, it's sort of whack. It pops up, whack it, and keep moving, rather than a decision to really go anywhere, and then they end up somewhere they didn't intend.
That's right. And ScoMo is interesting. I don't know whether it's a function of the fact that, he's always been really underestimated. But he had a role. I think he was the what was he? He basically, I think he was the organisational head of the New South Wales Liberal Party, and then he obviously, I think, ran Tourism Australia, and he's been in logistical roles, I think, several times in his career. So maybe it's that heritage. All I can tell you is I've worked with ScoMo on policy problems firsthand, and he's extremely smart. And like I've worked with him on very complex financial problems, where we've basically explained something that he's never heard before, and he's immediately distilled down the essence of the problem, and also helped identify the solutions and understood how it all threads together. And he's and then again, he's a bit of a killer when it comes to making decisions, because that's the other thing. Politicians don't want to make decisions. It's easy not to make decisions. It's easy just to be a cipher that's this kind of chameleon that pretends to be whatever you want them to be, whereas it's actually hard to take a stand. And ScoMo on the Chinese situation, maybe he should have got Europe. So obviously, for those who don't know, I think we all do know, ScoMo basically came out and said we need to have a global inquiry into the origins of COVID-19, and Australia led the whole world to this conclusion at the UN. Over 120 nations signed up to this resolution that we need to have an independent inquiry outside of the World Health Organization, because the WHO is culpable for some terrible, terrible mistakes, telling the world that there was no human-to-human transmission as late as late January, when that was demonstrably not the case, just to protect apparently their relationship with the Chinese. Notwithstanding Australia's great trading partnership with the Chinese, and she is a very, very important trading partner, ScoMo basically had the balls to get up there and say, we actually think we do need to do this. This is not about vilifying the Chinese. It's more about understanding the cause of the crisis and how we can try and prevent these mistakes from occurring again in the future. And again, the rub on it was that, well, maybe he should have gone to the Europeans first and then got quietly some constituency, and rather than Australia sticking our neck out, we could have gone with the whole world together. And that's a fair, I think, criticism, but nonetheless, it just shows you he's got big balls, mate.
I think it's really interesting, and I've read your article in the Fin today. I believe that the relationship, the way Australians deal with China will be the defining issue of the next 30 years, and that politicians who prevaricate and don't actually put our national interests first, I think they're absolutely dead in the water. The Labor Party, by trying to find a halfway house of a position here, I think have wedged themselves badly misread the Australian community. This has stopped the boat. John Howard got up and said, Australians have the right to choose who comes here and under what circumstances. This will be that decision. Australians are not comfortable with the disconnect between how the community feels about our relationship with China, broadly defined, and the politicians, I think, have been slow to pick that up. I don't think ScoMo is one of them. He's a good retail politician, as they say. I think he understands that people have concerns, that those concerns have nothing to do with race. It's the Chinese Communist Party, that word communist is in there somewhere, and I do think makes people very uneasy. So I agree with you. I think he's taken a stand, and it's easy not to, but I think this issue is going to be one that's going to be quite difficult for people to avoid.
Well, what the Chinese have really demonstrated, particularly since President Xi came to power in 2012, is that they don't respect anything other than really unquestionable decision-making fortitude. So the minute you give any quarter, any ground, the minute you acquiesce or appease, then ultimately you're captured, and that they will, they've proven here in Australia in the most recent episode with the tariffs on our barley exports, stopping our meat exports, threatening our coal and iron ore exports, simply because our PM said it'd be a good idea to have an inquiry into this, global catastrophe, which has, put millions of Australians out of work. that they will not hesitate to try and bully and intimidate what they perceive to be smaller and weaker powers in order to achieve their aims. And it's very interesting. I was speaking to a China expert today, one of the top China experts in the world, who was previously a advisor to the foreign minister, and they said that they think China's been very surprised by Australia's reaction, because the historic order of the day was China would divide and conquer, bully and intimidate, and people would fold. Whereas this time around, post-COVID-19, there's a growing global coalition of mostly democratic countries that recognize that we want China to partner with us according to the terms that she agreed, which was to respect the rule of law, property rights, and the Western capitalist open trading system that has been the principal reason why hundreds of millions of Chinese have lifted out of poverty. It's been that ability to export to Western markets. It's been the preparedness of Western markets to use China as a supply chain that has really powered that prosperity. And so it's important, that she hopefully adjusts and corrects course, and we don't end up in some huge major power conflict, because that is the risk. And she's a very ideological president.
I was just going to say, I think that there is no hope for that. This is a person driven by ideology. This is not a person driven by a concern for the good of the common person in China. People that typically weld people into their homes and demonstrate type of behaviour that went on in Wuhan during the lockdown, which will come out ultimately, but there's a lot of it online. This is not a person concerned with the common person. Modern Chinese communism is not some manifestation of equality for all. You've got half the Politburo wearing $1 million Pateks.
Yeah, I think what the world underestimated with President Xi is that he's a very ideological president that is, basically draws inspiration, he says, from Lenin and Stalin. And if you read his speeches that he's given repeatedly, he says very clearly that his end game is Chinese socialism, which needs to defeat capitalism. He is focused on winning the battle with capitalism. So right now we've had a multi-decade period where China has exploited the vulnerabilities in capitalism by cheating, stealing IP, not playing by the rules of the game, getting the state to subsidize her major corporations to win global market share by price discounting, and has basically affected a huge transfer of wealth from the rest of the world, who are playing by the proper rules of the game, and to China, and that's what's powered that prosperity. But I think the world has woken up to this, and that's why we're seeing now this term decoupling, where the US and increasingly, the so-called Five Eyes nations, Australia, the UK, Canada, New Zealand, and the US, and now I think more and more the Europeans, recognizing that we can't have nationally sensitive industries with their supply chains based in China, because if anything were ever to happen with our relationship with China, we'd be in a very bad place. And any supply chain, frankly, in a country where that country does not respect contract rights, property rights, and the rule of law, is at risk. And obviously, I hope you're wrong. I really hope that President Xi will adjust course and discard his ideological ideals, and understand that business model is broken, and history teaches the
factors that we can point to for a senior communist leader in the last 100 years.
That's right.
I think you're looking for a Pauline type conversion where, he suddenly changes who he is. I think it's more likely that senior Chinese figures change their president for life than their president for life changes. But I think it's going to need the type of response from ScoMo and other leaders to actually lead and reflect the will of their people. So it'd be very interesting to watch. I wanted to move to, I think it'd be very interesting to watch Boris Johnson. I think Boris is in a corner. The young lad's had the China virus. He's now got the Chinese into him for 25 or 35% of his 5G network. What do you think the odds are that he pulls the pin and says, I don't think we need you guys involved in this anymore?
Well, I've actually done a lot of work on this. I mean, I've spoken to guys who worked at their electronic espionage agency, GCHQ, and Huawei's obviously got a partnership with British Telecom. But I heard somebody who said that, listen, taking a step back, the Europeans and the UK have been several steps removed from these risks, whereas here in Australia, in our antipodal position, it's very much front of mind. China's the biggest source of immigration to our country. We've had massive espionage and, crucially, foreign interference operations run by the Chinese in Australia. And so we've been living and breathing these risks for some time, whereas for the Europeans and the UK, it hasn't been as omnipresent. I think Bojo is starting to wake up to the risks. And whether he actually actions any fundamental changes, I'm not sure. But I mean, certainly the Americans and the Australians have for a long time argued to the UK that it is completely unacceptable having your core telecommunications infrastructure controlled by a one-party political state that is highly authoritarian and that is hell-bent on replacing capitalism with its own version of socialism. So that makes no sense at all. But it's going to be expensive, that disengagement. But put it this way, balance of probabilities, I'd say that that's the way they roll, that the UK does ultimately disengage, but they have actually fought it. I mean, Huawei's entrenchment in UK telco is sort of a multi-decade experience. So it's going to be a big deal disengaging.
Yeah, it'd be interesting. I think that'll be the future. That'll be the bellwether of the future of his prime ministership.
100%.
Issues that I think are quite interesting. Now, for our Australian economy, as we obviously grapple with, the crisis and its impact, we hear a lot of alphabet descriptions around the economy: a V-shaped recovery, a W-shaped recovery, and all sorts of gibber. What's your take on what the next 2 years look like?
I think it's going to be hard for several reasons. I think we'll get an initial sugar hit of activity as we get back to work. We built forecasting models for COVID-19 and very sophisticated data science tracking systems that basically tracked every infection and fatality in the world and forecast the trajectory of the virus for every country in the world. And our forecasts that we published in March very clearly argued that, or found that, the peak in new infections would be early April, and that the curves would flatten in Australia, particularly very quickly, which would then allow the Prime Minister to basically step away from his proposed 6-month business hibernation plan, which I argued was wrong, and basically embrace a 1 to 2 month short lockdown followed by a much more rapid than expected normalisation. This in turn means his fiscal policy stimulus, which is sized at 10.6% of GDP, and was really based on the flawed epidemiologist forecasts for the Aussie health system being completely overwhelmed and the virus peaking in July, and was sized for mitigating a 6-month depression. That's proven to be massively inappropriate. So I think you'll see the government start paring back the fiscal stimulus very aggressively indeed, which they need to do to ensure that future generations of Australians aren't lumbered with massive liabilities that they have to service through their taxes. And I think that you'll see growth normalise quicker than people think. Having said that, there will be this new normal that everyone talks about, and that will be a world where we have more public debt, more private debt, because a lot of people have taken interest repayment holidays, about 10% of all bank borrowers. And counterbalance against a lot of stimulus, so a lot of residual fiscal and monetary policy stimulus. The RBA's cut mortgage rates effectively by 75 to 150 basis points since April last year. The cash rate's down at 0.25%. Fiscal policy is highly stimulatory. So we'll get some growth tailwinds there. I think the housing market will fare a lot better than people assume. We're already seeing Sydney auction clearance rates back above 70%. And
this is the one, Chris, I wanted to get you and a housing bear, into a separate episode on, because I think that, if an Australian is looking to, let's assume they've got a job, they've got to invest somewhere. Housing is a great love of Australians, and unless there's absolutely gigantic unemployment, and even then you've got two markets, then where do people put their money if they're not going to put it into a house?
Well, this is the point. The cash rate's near zero. TDs are not providing them the income they need. They can get 4 to 5% gross yields on apartments in major metro cities. Plus, they can get 5 times leverage from the bank at a cost of about 2%. So I think you'll see that the one asset class that's performed during this crisis has been residential real estate. Aussie house prices rose in January, they rose in February, they rose in March, and they rose in April. They have softened a little bit in May, but I expect that softening to be temporary and modest. I think house prices will fall nationally at most by 5%. I think generally they'll flatline. And then I think the boom that we were starting to experience between April last year and February this year, when house prices nationally rose by circa 10% as we had projected in April last year, I think that will reassert itself because there's been a massive increase in purchasing power. Now, that's my central case. Obviously, the risks to that central case are if China decides to kind of block all Aussie exports to China, that's going to be a big freaking deal. And that could derail the wonder down under, so to speak, and the seemingly never-ending Aussie prosperity. And obviously, if there's a kinetic conflict, the outbreak of war between China and the US over Taiwan, for example, that's a low probability possibility, but that's a very serious contingency that does, risk our system as we know it. So there are risks, but I'm pretty confident that housing will fare okay. In terms of the economy overall, I expect the unemployment rate to kind of come back down to a reasonably low level of circa 6 to 7%. It was about 5% before the great virus crisis, and I think we'll be fine. I think the end game here, what we call is a V-U-shaped recovery. So an initial pop and then a swoosh style recovery thereafter, where you'll have modest growth and we'll just grind away. I think the great opportunity for Australia is it's going to be a strategic national imperative to rebuild our manufacturing industry as we try and reduce our dependency on the supply chains in the Middle Kingdom in China. And you're seeing a lot of smart business leaders and politicians say, hey, for a lot of critical industry, we need to start making this kit ourselves, whether it's PPE gear, or sundry other inputs and products and services that we rely upon. So I think that's an opportunity. The other quick final comment on the Aussie economy, Brett, I'd make is that of any economy in the world that is well positioned today, it has to be Australia, other than in a contingency where China and the US go to war where we're very poorly placed. So let's just set that one aside. But if you think about what happened, we came into the great virus crisis with a balanced budget. So our fiscal policy was almost in surplus, which was quite an extraordinary feat by ScoMo and then Frydenberg. So that was a big tick. Commodity prices today remain incredibly high, particularly iron ore. And of any country in the world that has had to contend with the corona or COVID-19, Australia has really outperformed almost everyone bar New Zealand and Hong Kong. So really Australia, New Zealand, Hong Kong, Taiwan, probably the best four best performing countries in the world in terms of their ability to flatten those curves and minimize fatalities. And so I think Australia globally is going to attract a premium as a destination of choice for aspirational human capital that wants political stability, great physical amenities, great people. We're the most multicultural country in the OECD. 30% of us were born overseas. I mean, what can you not love about Australia other than redback spiders, funnel webs, sharks, and crocodiles?
It's green, it's clean, and it's good. It's great. Just final comment on that, and I just want to ask you about the US, and I'll let you go. But I've been saying for some years now that the idea of industry policy has been politicized, but it's desperately needed. In that, at a leadership level, you do have to pick winners. You have to, as a government, say we cannot be getting our PPE, our chemicals for water sanitation, all of the stuff that came out of defence preparedness study that I think I saw the other week.
Our pharmaceutical products?
Yeah, pharmaceuticals, chemicals,
antibiotics,
all of this. And so you do have to protect your country. And one of the things that staggers me is, we're just lowly chartered accountants, and our industry body won't allow us to have, certainly we are directed not to have more than 10% of any of our firms with one client. And it is staggering when you read that our barley growers sell 50% of their product to one country. It gives that country or that market or that company undue leverage. And there is, I believe, a role for government to actually lead, make some decisions and point people in the right direction. If they can't do it themselves, they should be able to do it themselves. It's just not prudent.
Well, I think that's a key point, by the way, because the economists won't like this idea of central planning. But if there's market failure, and I think there's probably a market failure in when you take a free market and you ask it to insure against non-market risks, specifically national security catastrophe risks, markets are not very good at doing that. So that's where you can overlay, okay, well, we actually need policymakers to provide some prescriptive decision-making guidance because the market's failing here. It's not properly pricing in national security risks, as in the fact that we need to produce antibiotics and PPEs ourselves. And I agree completely, mate. And that'll be positive for domestic growth.
Yeah, no question. And I think it'll be positive for whichever political leader can work that one out and actually lead on it. Final question. I love Top Gear, the old show, and Jeremy Clarkson, who loves his cars, once said that a Ferrari is a car that impresses a 10-year-old. And look, I've had a young, my young son's now 15, but he's been, he was, I think, 11 when President Trump was elected. And I've said that President Trump is like a Ferrari. He's the type of president that certainly impressed an 11-year-old. It's all light, colour and action. What's your take on the US from what happens in the next election and what do they do with their economy?
I think the US is actually, clearly, again, I was speaking to a global political expert today about Trump, and the same person I was talking to about China, and he said that Trump is unlike any president we've ever seen anywhere in the world. And his point, which to be frank, I didn't fully understand. He was saying something to the effect that Trump, and this person is actually an advisor to the White House right now, and he said that Trump doesn't really account for or game the costs of inaction or action. He's kind of like a perpetual motion machine. Yeah. And so I think that perpetual motion machine sometimes is really good and sometimes is really bad. And I think that, clearly his management of COVID-19 has been absolutely, shocking. But having said that, he's hamstrung by his states. But I think that the COVID-19...
Chris, I think that narrative's wrong. We were in the US in January. It was all about impeachment. Nancy Pelosi was handing out impeachment pens when they should have been preparing for a pandemic. It was live, it was on, and they were playing bullshit politics. Yeah. And they turned around and said, well, the Donald was about to not be the president potentially.
But I think where Trump is really strong, he has that, that visceral, entrepreneurial understanding of competitive opportunity and competitive threat. And I think he sees in a very clear-eyed fashion. Now, I think it's taken time. I think he's gone on a bit of a journey through his presidency, but I think he sees precisely what the opportunities and threats are with China. And I think he also has more negotiating experience than any other president in US history. And you can kind of, critique whether he was or is not a good negotiator. But he also understands the rhythms of the human conditions and how you deal with caustic counterparties like China. And I think that there's tremendous strategic clarity in the US amongst Democrats and Republicans about what the US now needs to do. And that is basically they are decoupling no matter what. And frankly, they're going to decouple right across the board. And I think that will be tremendously positive for America. And I think that will be net positive for geopolitical stability, because the one thing we do not want is the most powerful country in the world being a one-person political state that is authoritarian and, again, hell-bent on displacing the capitalist model. So I think that the world with a benevolent US hegemon is a relatively safer place. I think the problem with Trump is he has really, in a very ham-fisted way, managed his relations with, he has no sense of history, he has no sense of, Trump's a little bit like the Chinese. He kind of sees everyone through a zero-sum lens. Yeah. And I think in understanding bilaterally his China relationship, he's got that right. So he's kind of assessed and judged the strengths and weaknesses of the bilateral US-China relationship correctly. But the problem is that he's bilateral with everybody, and he's zero-sum with everybody, and he discounts the benefits of the global Western order that has served us so well since the Second World War. And as a result of that, the US's alliances have really deteriorated over time through Trump's destructive behaviors. And multilateral organizations, which are key clearinghouses for the Western liberal order to come together and make collective decisions that have to be collective decisions, like NATO, like the UN, like the WHO, like the IMF, the World Bank, and so on and so forth. These organizations have been really threatened by Trump, as have bilateral conventional alliances, which is a very, very bad thing for the world, right? Because right now we need the world to come together with a clear resolution that we have a vision for our future, which is a prosperous, rules-based, transparent, open trading system. That's all we want. Rules-based, open trading system where everyone competes on their own merits. They don't cheat, they don't steal, they don't threaten and intimidate with...
So the Chinese are not going to play that game. Do they end up behind an iron curtain?
Yes, yeah. I think that the unless the Chinese play that game, I think the only option is regression, and I think you just get a Chinese block of the world where the Chinese trade with agency states, subordinated states in the developing world, and the Russians and North Korea, and perhaps on the periphery there'll be some modest trade with the rest of the world. But this is I think right now we're on a really important inflection point in history, which is why I've written about what I call China's choice in my Financial Review column today.
Yeah, I think. Now I'd love to direct everyone there to the Fin Review to have a read of that today, and I'm conscious of not taking up more of Chris's time. Chris, I've really enjoyed sharing a chat with you. I really appreciate you coming on the show. I hope that this type of information and dialogue will make our clients and friends who listen better off. That's the ethos of our organisation. And so from everyone at Kelly+Partners, I want to say thank you to Christopher Joye, founder of Coolibah Capital, commentator and writer as his favourite passion. Thanks, Chris.
And Brett, if I could just add, thank you so much for having me on the show. I'm a huge admirer of what you've achieved with Kelly+Partners. You guys are among the best in the business, and great to get your erudite thoughts and feedback as well. It's a real privilege, so thank you, mate.
Thanks, Chris. Thank you.
Thanks for listening to the Be Better Off Show. If you enjoyed this episode, don't forget to rate and review on Apple Podcasts.
Have a great day.